Good morning and welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Here are the stories we're following today. Joining us now is Jamie Cox. He is the managing partner at Harris Financial Group. He's on the line from Richmond, Virginia. Jamie, good of you to make time to chat with us. Let's talk about the Fed first. Right now, the market has been in the process of backing away from the notion that the Fed is going to be, I don't want to say aggressive, but certainly accommodative in cutting interest rates here in the near term. How do you see the makeup of the adjustment that we have seen in the Fed's policy pivot?
I think it's healthy that the market is starting to back off of these aggressive, the potential aggressive rate cuts by the Fed. It was never going to be, large scale cuts by the Fed really quickly. And the market sold off, or the Treasury market, basically tried to front run what they thought the Fed might do instead of listening to what the Fed was saying, that they were going to be slow, methodical, and that even though they went 50 basis points, it was more of a reflection that the Fed should have started cutting rates in the summer. So they were just doing a little catch up by doing their September rate cut with a little bit more authority than they typically do when they start a rate cutting cycle. But from here forward, we're going to be back on the typical step function 25 basis point cut on a clear path down to, what they believe should be the terminal rate, probably in the mid threes, but it's not going to be quick. It's going to be very slow. And it's very possible they could skip a meeting or two. And I think that's what's causing the Treasury market to kind of oscillate around here as they try to find the right level of rates going forward.
I think that's a good point. I mean, yields were up today across the curve, not by much, but it kind of goes to the point you just made. So we can maybe agree that the next Fed meeting is one of the near-term risk for the market. I think there are a few others. We are in the midst of a lot of earnings. We have the jobs data for the month of October. That's about 2 weeks from now. And then we've got an election coming up. So if you were to assign the greater influence here of each of those risks, what would rank top of your list?
I think inflation data going forward is going to be critical. We've been in sort of a cycle where markets have maybe misinterpreted, or there were some points in the inflation story at the beginning of the year that sort of took the market off sides in terms of what the expected path of rates would be. And we've seen sort of that, disinflation, sort of be baked in the numbers over the last couple of months. And I think if that continues, then markets will feel more comfortable in the path of rates, as we go into 2025. But we have some PCE data and things like that next week, which will confirm, I think, the base case of disinflation, and that's a good thing overall in the economy and also here in the United States for consumers. It's a big deal. So I assign a high level of worth to the inflation data, followed very closely by, in the next 2 weeks, the election. I think this is kind of an unusual time. Most of the time, election years are rife with large market moves. You have multiple corrections, sometimes deep ones, when one party or another sort of polls one way or the other, or there's some type of October surprise. You haven't really seen that at all this year. It's been very calm. But all of a sudden, in the last couple of days, you started to see what is your typical pre-election sell-off. And I think we're in the middle of it right now. And I think we'll be living with some volatility for the next 2 weeks until the election is over. That's the second most important. And then the rest is, we still have a very strong consumer-based economy. Jobs, they're still very strong. And when all of that, sort of election nonsense goes away and people start paying attention to the things that really matter, which are earnings and companies, are going to be very pleased. And we're going to see very good economic growth continue for probably the next 6 to 8 months. And if the Fed continues, its rate cutting cycle, this may be the fourth time that the Fed has started to cut rates outside of a recession. And that's very, very positive for stocks. And you see in the 2 months after a rate cutting cycle happens, when there's no recession, you see almost every single sector up 12 months later. And I think you're going to see that be the dominant trend once we get by these smaller things, which are whether the inflation wave has resurged or whether or not which party wins in the election in the next 2 weeks.
So if growth remains positive, that would be a positive for the equity market. And if the Fed is cutting in the face of that growth, I would imagine that a lot of cash comes off the sidelines and goes into stocks. Is that your view?
Indeed. And most of the time when you hear the, sort of the mantra cash on the sidelines, that's sort of a fiction that people on Wall Street make up when they want to think that money's going to move from one asset class to another. But in this instance, it's actually true because when the Fed started raising interest rates about a year and a half ago, it seems like it's forever ago when they first started raising rates, but there was a lot of money that moved out of yield alternatives like utilities or telecom or really, really high dividend paying stocks and moved into very safe places like T-bills or money markets where you could earn respectable rates of interest for the first time. But now we're getting to the point where that respectable rate of interest is going to decline over the next, probably 6 to 9 months to a level in which those dividend paying stocks are going to become preferenced again. So you're going to see that money find its way back to where it came from. So I really believe you're going to see some, nice returns in consumer staples, financials, real estate. The only sector I would say that would typically participate in that value trade will not be energy. I think energy is probably one of those sectors where the likely path is down. Mm-hmm. So I think investors need to be careful there. But in the other more traditional value sectors, it's going to be a pretty good. There's going to be good and stable flows into those funds in those sectors.
So I hear how positive you are on the outlook for the U.S., but I'm curious about whether or not you're seeing opportunity offshore, particularly in Asia, as China tries to supercharge its economy with varieties of stimulus.
It's an interesting dynamic for sure. I mean, you've had Japan having its, it's been doing very well. I don't follow the Chinese markets as closely, but when you see, a large economy like China being determined to make sure that its manufacturing base is protected, that it's going to make sure its consumer economy is protected and make things cheaper. When you have that many people, consuming things, it is definitely going to be positive overall. And if you sell things into China, if you own U.S. companies that sell things into Asia, you're going to be very happy. And so I think that's the way I would play it. I don't know necessarily how it will play out, but anytime the rates are being reduced and you have reserve requirements reduced, that does supercharge and directly affect the economy. And I think that's something that they are very much intend to do. Europe, they have finally maybe broken the back of inflation over there. And I think when you'll see larger interest rate declines or cuts in the next, few quarters, and that will help them as well. It's been a struggle for Europe the last year or so. And I think that may, now that the inflation story is starting to turn for them, I think you'll start to see some positive things there. But, these are all like sector specific things. But if you look and drill down to company specific areas, there's plenty of money to be made, particularly in healthcare. I mean, if you're talking about a Europe story, there's no better place to find a place to make money than in the healthcare stocks. Eli Lilly, Pfizer, you can find all kinds of places to make money in Europe if you're just looking in the healthcare sector.
So to bring it back to the U.S. equity market, given everything that we've been talking about, do you want to be more exposed, let's say, to large U.S. multinational companies, or given the fact that you are expecting growth to kind of be very, very positive in the States, do I want to be more exposed, let's say, to the small cap sector?
I think that it's a little bit of both. And if interest rates are falling and you have a really strong economy, the small caps are going to outperform. And there was a little bit of that in the summer where there was a large allocation shift from, technology stocks and things like that into the small cap area and arena. And I think that maybe was a little bit premature, but I think it's going to play out next year because the interest rate environment is going to drop enough where it's going to, be meaningful for them. But, the large multi-cap stocks are still levered largely to tech. And that story just is the story that keeps on giving. I mean, there's very little let up, and it's really hard to look at any other sector and be as excited as you can be with what the potential of a technology company that is trying to participate or sell AI related services. It's going to be a good run for them for a while.
So we've been talking really about equities primarily, but I want to understand whether you're seeing opportunities still in fixed income right now. Assuming that you're right and the Fed is consistent in the number of rate cuts that it delivers. You're looking for a terminal rate of around 3.5%. Is there anything in fixed income that you like right now?
High yield. High yield is an easier play. You have very little bankruptcy risk in some of the credits that are around junk, the triple C area, and so that's a good place where value can be gleaned. And then really short duration. It's definitely tough in longer term and longer duration treasuries. It's not a lot of money to be made there. And if the no landing scenario continues to play out, 20, 30-year U.S. treasuries are not going to do much for you for a while. So I think if outside of high yield, it's very, very short duration, it may be 2 years and below on the treasury market, and then corporates 5 years and below in duration.
That is Jamie Cox. He is managing partner at Harris Financial, joining us from Richmond, Virginia on the Bloomberg Daybreak Asia podcast. Earlier today, U.S. Secretary of State Antony Blinken held talks with Saudi Crown Prince Mohammed bin Salman. The aim here was to reach a ceasefire deal of some sort, not only for Gaza, but Lebanon as well. The Biden administration has been trying to garner regional support to push toward peace. For a closer look, we are joined by Monika Bičkauskaitė, Public Policy Director at Key Elements Group in London. Monika, thank you so much for making time to chat with us. Are you optimistic right now that the latest trip by U.S. Secretary of State Antony Blinken can move the needle in any direction toward peace?
Thank you for having me. So yes, this visit is definitely important for the Middle East because the U.S. is once again showing that it is really invested in regional stability in the Middle East. And during the visit both to Israel and also to Saudi Arabia, we have seen reports emerge from these countries and other countries such as Egypt, who is a key interlocutor with Hamas, who laid out a proposal for a temporary ceasefire for hostages deal. Under this proposal, we could see living Israeli hostages to be released in exchange for a ceasefire that would last for a couple of days. And hopefully that could help to break the deadlock. So I think that something like this, a temporary ceasefire agreement, could be seen in near future, and I'm rather optimistic about this type of agreement. However, if we're thinking about long-lasting, well-thought and implemented ceasefire, I think that that could be a bit premature to talk about, especially because the countries in the Middle East are anticipating the US presidential election. It's coming very soon. And we know that what is right for one administration might not be right for the other administration. And because of that, knowing that Netanyahu is a very seasoned politician, so are the other politicians that we're talking about in Saudi Arabia, they're seasoned politicians, and they know that they have to, in a way, wait out this period so that they can make this lasting ceasefire agreement with an administration that will be there for the next 4 years. And they know that this agreement could be stable, could be implemented, and well respected. So I think that when we think about long-lasting agreement, it's a bit premature. However, short-term agreement could be made after these visits and after this period that is happening right now.
One of the things that is extremely clear is that Israel has been highly effective in eliminating the leadership, not just for Hamas, but Hezbollah as well. To what extent does this kind of improve the chances that there may be peace?
Yeah, so you're definitely right. The killing of Yahya Sinwar, who was probably the last standing Hamas leader who was the architect of the horrific October 7 terror attacks on Israel. The killing of this leader has showed that Israeli intelligence is back on the map, and that Israeli intelligence has the capabilities, and if they have to use them, they will use them. And if you compare, let's say, Hezbollah's attacks on Israel, we have seen them to be much less effective because of these intelligence capabilities that Israel has. And I think that we are likely to see continued limited operations from Israel to continue to fight against Hezbollah as well as Hamas. And that definitely is a game changer because we see that Israeli intelligence is able to dismantle these organizations, at least their operational side. Of course, their ideology is still alive, and it will take very long time for their ideology to change. However, when we're talking about operational side, we can see that Israel is achieving its strategic efforts, and strategic targets are well achieved by Israeli intelligence.
Hezbollah, Hamas, both operatives for Iran. To what extent do we have to be concerned about a direct conflict between Israel and Iran?
I think that direct conflict, full-scale war, is not necessarily something that we need to think about right now. However, when you think about Iran, we have to think about other type of coalitions that are being built, because we know that Iran is not the sole actor. There's also Russia. Iran and Russia has been definitely increasing their collaboration, and we're talking not only about weapons, but we're talking about knowledge being passed between the two countries. We have seen that even in Hezbollah operations, there has been Russian weapons used, and Israel has detected, IDF has found Russian custom-made weapons in the Hezbollah headquarters. So we know that whereas Iran is really central actor in the Middle East, it's not necessarily acting alone. Russia is building a coalition of power in the region, and I think this is something that we definitely need to think about, as well as now we have seen North Korea being involved in the war in Ukraine and is now fighting for Russia. So we have to think about alliances like that being built in the future, because that is a huge risk geopolitically, for not only for the Middle East, but for the world.
It's very interesting because last week we were talking about the leak of 2 classified U.S. intelligence documents indicating Israeli military preparations for a potential strike against Iran. This is not something, though, that you are particularly concerned about.
Strike against Iran, yes, we might be able to see that, because especially there has been assassination attempt on Netanyahu, and this definitely was a red line crossed. However, when we're thinking about full-scale war, we have to remember that there are other actors. We were talking about Saudi Arabia in the Middle East, who is also trying to ensure that there's no regional major war happening, because of course that would be detrimental to the region. So because of that, I think that we need to consider some sort of limited attacks, and we have seen that Israel also is trying to eliminate Hamas and Hezbollah, and they're targeting specific targets. They're not necessarily trying to create a regional war that would encompass different countries, and definitely other countries would get involved in a war like this. So I think we need to think about tactical operations rather than full-scale war. However, of course, Middle East is a region where everything is changing every day, and things can get out of hand. The tensions are really high, and of course, things can happen. However, I think that Israel is trying to achieve its strategic goals, which is, first of all, returning of their hostages, and also dismantling Hamas and Hezbollah, and making sure that there's no more terrorist attacks like that one that happened on October 7th.
So, Monika, as you know, Russia recently hosted the BRICS summit. Iran is now a member of the alliance. Help me understand the developing relationship, how close Russia and Iran are becoming these days.
So they're definitely becoming closer, and there's a lot of military type of cooperation, and weapons being exchanged between the countries, and knowledge being exchanged between the countries. And another aspect that we need to worry is Russia's access to information regarding nuclear weapons and development of nuclear weapons, because Russia is still a part of the European body of nuclear agency, and nuclear weapon development is part of this kind of agency's mandate. And Russia is hiding behind scientists and scientific neutrality, saying that these are just scientists on a peaceful mission. However, they are collecting very important data, and they are still collaborating with Western institutions, and are able to gather this Western knowledge and transfer it to countries like Iran. So I think we need to be very, very of that. And definitely Putin is trying to show that BRICS is an important alliance. He is trying to show that Russia is not acting alone, and even the war in Ukraine, other countries are going to start participating and in a way countering NATO. So that is definitely important to look at, both in Ukraine and the Middle East. And this is developing fast, and I think this is an important issue to definitely think about in the future.
Monika, before I let you go, can I get your reaction to the U.S. saying today that North Korean troops are in Russia to aid in the fight against Ukraine?
Of course, this is a very important topic, and definitely there's been reports that 12,000 soldiers will be fighting in Ukraine for Russia. And that is definitely showing that Russia is trying to expand this conflict and trying to have powers of support from other countries. But the most important part of all of this is that Russia is also teaching North Koreans and giving them know-how, giving them the knowledge, not only of the weapons and the military actions, but also, as I said, nuclear weapons. So this is something that Russia is trying to, in a way, help North Korea to develop their own assets. And that is something extremely troublesome. And I think that the West definitely will have to pay even more attention now to Ukraine, because, with Ukraine, has been a lot of war fatigue, unfortunately, in the West. And some Western countries believe that this is not a primary issue right now. However, it is a primary issue. And I think the involvement of North Korea definitely shows that. And we need to turn our attention and learn how to divide the attention between, of course, there's the crisis in the Middle East, but there's still the war in Ukraine, and it's ongoing, and it's getting worse, as we can see, with Russia trying to maneuver and have these types of actions like involved with North Korea. That I don't think that many analysts even expected this to happen, and it is happening. So we need to start thinking what to do next in Ukraine and how to help Ukraine in the best we can.
Monika, thank you so much. We've covered a lot of ground, and I really appreciate your time. Monika Bičkauskaitė, Public Policy Director at Key Elements Group, joining us on the Daybreak Asia podcast. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. Our flagship New York station is also available on your Amazon Alexa devices. Just say, "Alexa, play Bloomberg 1130." Plus, listen coast to coast on the Bloomberg Business app, Sirius XM, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.